4 days ago, the United States Senate Banking Committee did something that it hasn't done in years. It passed a bipartisan Senate crypto bill that sent XRP jumping 7% on the week and was the top standard performer in the entire market. Tonight, it's given most of it back, and the people who don't understand why that happened are going to make the wrong move. I'm Chris Hare, the Crypto Cowboy. We've got a lot to cover tonight, so I'm going to go ahead and get into it. And let me start with legislation, because this is the entire story for XRP right now. The Digital Asset Market Clarity Act passed the Senate Banking Committee 15-9 on May 14th. All 13 Republicans voted yes. That's 2 Democrats, Senator Ruben Gallego of Arizona and Senator Angela Also Brooks of Maryland crossed the aisle. That's the bipartisan progress on crypto legislation. That has not happened in years. And here's what the bill actually does in plain English. Right now, the SEC and the CFTC are fighting over who gets to regulate crypto. That fight has been the single biggest reason institutions won't commit capital to the space at scale. The Clarity Act ends that fight, and it draws a clear line. Digital commodities go to the CFTC, and securities go to the SEC. And for XRP specifically, it writes the digital commodity classification into federal statute. It's not an interpretive ruling that the next administration can reverse with a memo. It's statute. It'll be statute, law, and permanent. The SEC and the CFTC jointly classified XRP as a digital commodity in March 2026. That was a massive win, but it cannot be undone. The Clarity Act makes it undoable, and that's the difference between winning a battle and winning the war. Now, here's the honest math on what comes next. The bill needs 60 votes on the Senate floor. Republicans hold 53 of those, and that means 7 Democrats have to cross over on a bill Senator Elizabeth Warren just called, one that will blow up the entire economy. TD Cowen gives a full Senate floor vote, roughly 1 in 3 odds, but here's what Cody Carbone, the head of Digital Chamber, told reporters after the move. It's a named source and it's verified. He said they will only bring the bill to the floor when they're confident they have the 60. The ethics provision around Trump's crypto holdings gets resolved before the vote, not after. Senator Gillibrand confirmed August is the hard deadline. You miss August, and per Senator Loomis, the next window is effectively 2030. White House targeting a July 4th for Trump's signature. That's the timeline. Committee passage to vote to signature all before summer recess. Polymarket odds for a full passage jump from 62 to 73% after Kennedy's commitment locked in committee. The market believes this gets done. Now the Ripple fundamentals, because this is not just a regulatory story. Real institutional infrastructure is being built on the XRP ledger right now. Ripple closed a $200 million debt facility for its Ripple Prime brokerage earlier this month. Tokenized real-world assets on the XRP ledger have topped $3 billion, placing it among the leading non-Ethereum networks for institutional tokenization. A Ripple, JP Morgan, MasterCard, Ondo pilot processed a tokenized U.S. Treasury redemption in under 5 seconds. And you need to read that again. JP Morgan, MasterCard, under 5 seconds. That's not a press release. That's a proof of concept at the highest level of institutional finance on the planet. U.S. listed spot XRP ETFs recorded 25.8 million in inflows in their largest single day since early January, bringing cumulative totals to inflows to $1.35 billion. Standard Chartered projects 4 to 8 billion in cumulative XRP ETF inflows by year end if the bill passes. And the analysts at 24/7 Wall Street placed the short-term XRP range target at 165 to 180 on a clean committee pass, climbing $3 to $5 by year end with full Senate passage. Prediction markets put a 78% probability on XRP trading above at $1.50 at some point this month. The legislation is real. The institutional framework is real. The question is whether the macro ceiling lifts in time for both of them to work together. Now the micro environment, because this is where exactly where XRP gave back its gains this week despite the best regulatory news it has ever received. Here's the tension nobody is connecting tonight. The S&P 500 hit record highs this week, led by AI and semiconductor stocks. The Philadelphia Semiconductor Index is up 2.6% in a single session. If you remove the AI stocks from the S&P 500 and that 142% gain since 2024, it collapses to 16%. The entire market is riding one trade, and while stocks were celebrating, the bond market was sending a completely different signal. The 10-year Treasury yield closed at 4.597% tonight. It's the highest close on the chart, above the levels that forced Trump's 90-day tariff pause in April 2025. The Kabisi letter, one of the most followed macro accounts on X, called it a bond market crisis this week. Their words, not mine, and I quote, "Bond yields do not care about AI. They care about a $2 trillion annual deficit, oil at $100, persistent inflation, and a government borrowing money every single day to fund a war." And they close with this: both cannot be true. And historically, it's not the bond market that's wrong. The market now sees a 60% plus chance that the Fed's next move is an interest rate hike. Rate cuts are fully priced out. 7% plus mortgages are expected next. Auto loan delinquencies are at a 32-year high. Stocks are pricing in AI euphoria. Bonds are pricing in a rate hike. Both cannot be right. That's a tinfoil cowboy hat in plain English. Price tells you what's coming before the headlines catch up. Watch what bonds are doing, not what stocks are celebrating. The bond market ceiling is the reason XRP is $1.41 tonight instead of $1.80. Not because the Clarity Act failed and not because Ripple's fundamentals changed, but because 4.97% yields and a dollar pressing at $100 are sitting on top of every risk asset in the market right now. When that ceiling lifts, and it will, XRP has a double catalyst that nothing else in this space has: its own regulatory tailwind plus the broader market recovery, and that combination is rare. The dollar, the DXY, closed at 99.27, pressing resistance at 99.37. A break above $100.44 on a closed daily candle is a headwind for every risk asset. Yields rising and the dollar rising simultaneously, that's a double headwind. Oil closed at $100 at 101.15. The Straits still closed. War in its 77th day. Stagflationary pressure, bad for risk assets, bad for rate cut expectations. Bitcoin dominance closed at 60.78%, sitting on the 60.42% fib support. The faucet hasn't turned. Alt season is not confirmed. XRP follows the broader market. Until that changes, that's the honest gate. In strategy, Michael Saylor's company announced a $1.5 billion convertible bond repurchase with settlement May 19th. That is 3 days from now. Potential Bitcoin sell pressure incoming. If Bitcoin drops, XRP follows. It's on the radar. Be still and know. Before the charts, here's what the 4-layer framework called and when it called it. I called the XRP February low on camera. The framework flagged the biggest oversold signal at the war low equivalent, the same cipher signal that called Bitcoin's bottom at 59,836 and ICP structural bottom at $1.99. The framework called it. I'm just the messenger. And the $100 challenge, trade 29, is live and working. Short entered at 80,077. Take profit 1 and 2 have both been hit. We're sitting at 57% return on equity right now. The stop's at break even. This trade costs nothing to hold. The record stands 19 wins, 11 losses. Got 2 take profits left, 76,621, and a runner at $75,000. Account sitting at 236 realized, up from 136 from the $100 starting point. If this is your first time here, we're breaking down the single most important regulatory catalyst XRP has ever seen and exactly what the 2 roads look like from here. Hit subscribe, tap that bell right now. You don't want to miss what happens next. Now let's talk about what's moving on chain, because day 16 just printed. 16 consecutive days, same institution, not a single miss. $45 billion accumulated and they have not stopped once. Think about that like a grain elevator. The same buyer walks in every morning for 16 days, buys the same quantity, moves it to the same destination, and at some point you have to stop and ask, who is that and what do they know that I don't? Well, we've tracked this entire entity through its 8 wallet hops back to June 2023. Arkham Intelligence calls it Cluster 687A. It's 136 connected addresses, $11 billion in total volume. CoinJoin privately mixing throughout. Arkham, one of the best on-chain intelligence firms in the world, cannot identify who this is. That is not a day trader. That's not a hedge fund. Hedge funds don't run 16 consecutive days at this scale with this level of privacy architecture. The thesis remains. It's either a sovereign wealth fund or a nation state, and they have not stopped once. Now on the scoreboard, on XRP specifically, because this is where the real story is today. The long-short ratios are the most important data point in this entire video. Binance XRP long-short account ratio is 3.2373. More than 3 longs for every short. OKX, XRP 357, Binance top trader accounts 3.686, Binance top trader positions 1.794. Smart Money is positioned long on XRP across every exchange and every metric. That top trader position ratio of 1.794 tells you the sophisticated accounts have real conviction to the long side, and this is not retail. Retail doesn't run those ratios consistently across multiple exchanges simultaneously. Excuse me. Liquidations tell the story of the week. 24-hour breakdown. Longs wrecked 8.83 million versus 211,000. Shorts. Longs took the pain this week as BTC flushed lower and pulled XRP down with it. But look at what that actually means. The weak longs have been washed out. The leverage excess is gone. The people who win XRP on hope and borrowed money got liquidated. What remains are the accounts that chose to stay. That's a cleaner starting condition for the next move. Open interest peaked at $10 billion in November 2025 when XRP was near $3.38. Current open interest has contracted dramatically, sitting near $2.5 to $3 billion. That's a 70% reduction in speculative leverage from the peak. Less leverage means the next move is built on real demand, not paper. Low open interest on a potential catalyst event is a setup, not a warning. Funding rate is the cleanest signal on the deck. The open interest weighted funding has been essentially flat, hugging zero since the November 2025 peak. Nobody is paying a premium to hold longs or shorts right now. That's the cleanest possible starting condition for a directional move. When the move comes, funding will chase it rather than drain it. Now here's the short-term signal. 4-hour futures net inflow positive at 5.76 million, 1-hour positive 7.18 million. Short-term and intermediate money is flowing into XRP right now, even as the weekly flush still shows in the 12-hour window. The buying is happening and spot flows confirm it. 1-hour spot net inflow positive 854,000. The directional shift on the shorter time frames is real. The detective read right now. Smart money sitting 3.2 to 3.7 to 1 long across every exchange. Open interest down 70% from the peak. Funding neutral. Leverage weak hands washed out. Fresh money flowing in on the 1-hour and 4-hour. The legislation just cleared committee. JP Morgan and MasterCard are settling treasury transactions on the XRP ledger in under 5 seconds, and the price is at $1.41. That gap between what XRP is and what its price tag is exactly what the 4-layer framework is built to find. And now let's get into the charts, because I know that's what you're here for. The weekly chart, the 30,000 foot view on XRP. And what we're looking at, XRP closed the week at 141. That's down 62% from the all-time high of 338 in January 2025. The descending channel from that all-time high is visible on the weekly. Lower highs, lower lows. The ceiling contains every rally attempt for 5 months. That's the macro structure. It's real, and it stays on the map until proven otherwise. The weekly fib fence posts tell you where the levels live. The 786 at $1.57.8 is the first wall. That's where the Clarity Act pumped rejected this week. The daily golden zone at 181.5 and 2083 is the first meaningful recovery target above that. The zero fib at $1.1190 is the war low equivalent, the structural floor that cannot break without changing the entire thesis. The all-time high at 338 sits at the top of the map as the destination if the bull case plays out fully over the next 12 to 18 months. What the indicators say, the speedometer, K and D, both rising and compressing towards the midpoint after spending months below it, not overbought. There's room to run. The weekly heartbeat recovering from deeply oversold territory. That's the RSI. It's below 50 but curling. The weekly cipher showing hidden bull labels at the lows, with momentum building underneath while price has been grinding sideways. Volume contracted significantly from the November 2025 peak. The speculative frenzy is gone, and what remains is organic flow. Contracting volume during a consolidation is compression before expansion. And what it means, the weekly structure is bearish until a weekly close above the descending channel ceiling confirms otherwise, but the indicators are diverging from the price action. Momentum building while price grinds. That divergence on a weekly is a long setup building over time, not a short-term trade. The zero fib floor at $1.1190 is the line that cannot break. A weekly close above 157.8 is the first structural signal that the recovery is real. The full bull case, $3 to $5 by year end, requires a Clarity Act floor vote and a Bitcoin Wave 5 up. Both roads are on this chart. The weekly close tells you which one is loading. Now we're going to zoom in, look at that daily chart. This is where the near-term decisions get made, and what we're looking at. XRP at $1.41, sitting in a structured downtrend from 338 all-time high. The descending the descending trend lines from an all-time high through February and April, lower highs from the ceiling that has contracted every rally attempt. That's the structure. Acknowledge it before anything else. The daily golden zone sits at 181 to 208.3. The recovery target zone that defines the bull case, the 786 fence post at 157.8 is the wall price rejected from on the Clarity Act pump to $1.54 this week. The one fib at 2777 is the daily floor, the level that absolutely cannot break on a daily close if the structure shifts to a deeper correction. What the indicators say, daily speedometer, K above D, that's the stochastic RSI, and rising through the midpoint, the first sustained time above the speedometer midpoint since the February peak. Daily heartbeat, the RSI above 50 for the first time since early February, a momentum confirmation signal. It does not guarantee continuation, but it is a meaningful shift from the persistent sub 50 readings that defined the entire downtrend from January through April. Daily cipher, hidden bullish active since the April low with 2 bull labels printed at the lows. Money flow is rising. And what it means, the daily structure is bearish, depending on the channel intact, descending channel intact, lower highs in place. But the indicators are telling a different story. The speedometer above 50 and rising, heartbeat above 50 for the first time since February, cipher bull active. That divergence between price structure and indicator momentum is where setups live. The daily floor at 127.7 must hold. A daily close above 157.8 is the first signal. Recovery thesis is gaining traction. The golden zone at 181.5 to 208.3 is the bull target. If that matters, if the floor vote clears. And something most of you haven't thought about, every single time you sell crypto for a gain outside of a retirement account, the IRS is your silent partner, taking their cut every single time. A Bitcoin IRA through iTrust Capital lets your gains grow tax deferred or tax free. It's the same concept as your 401k, but built for Bitcoin and crypto. You're not buying Bitcoin, you're protecting it, not because they're a sponsor, but because it's the right move. There's a $300 sign up bonus when you sign up. The link is in my description. Go check it out. In the 4-hour chart, this is where the trade setup lives tonight. And what we're looking at, price at $1.41, sitting exactly inside the 4-hour fib compression zone at the 382 at 142.4 and the 382 alt at 140.4. Pinching price from both sides, that is a compression zone. Think of it like a coiled spring between two fence posts. The 4-hour golden zone sits above 148.2 to 151.4. That's the first meaningful resistance in the level the Clarity Act pump failed to hold above. The 4-hour retracement zone below at 132.9 to 139.6 is the area that held during these April base building. That zone must hold for the bull thesis to remain intact. What the indicators say, the 4-hour speedometer, K at 240, D at 161. Pinned at 0, the most oversold reading possible on the 4-hour, and it's happening inside the fib compression zone above the retracement support. The 4-hour cipher printed a hidden bull signal at the current low, the same signal that marked the April low before XRP's move from $1.35 to $1.54. 2 prior hidden bull labels on the chart at the March and April lows, both resolved with meaningful bounces. The 4-hour cipher also shows a bear divergence trend line active. Lower highs on the cipher from the May high at 154. Bull and bear signals in tension. Price needs to break above 144.3 on a closed 4-hour candle to confirm the hidden bull is weaning. What it means, the 4-hour speedometer pinned at 0 inside the fib compression zone with a hidden bull cipher signal. Historically, when XRP reversals initiate, the bear divergence trend line is the honest counter signal. That's not a confirmed entry. It's a setup loading. You need to watch 144.3 on a closed candle. That's the tell. A good farrier doesn't shoe a horse still moving. You got to wait for the signal. And I do 80% of my trading on BloFin. It's the only exchange that didn't go down during the October 10th flash crash. We've got a $7,000 trading competition run of all of May. Go ahead and check out the link in my description. 2 roads from here, both have a plan. Neither has panic. Road 1, the setup confirms the 4-hour hidden bull holds. Price bakes 144.3 on a closed 4-hour candle. Bitcoin finds its wave 4 floor at $75,000 and begins wave 5 up. Bitcoin dominance pulls back from 60.78% and the faucet turns. Yields pull back from 4.597% as the macro picture stabilizes. The Clarity Act ethics provision gets resolved and the floor vote is scheduled before the August reset. First targets, 148.2, the 4-hour golden zone bottom. Extension target, 151.4 to 157.8. If the floor vote passes, Standard Charter's 4 to 8 billion ETF inflow projection activates in the daily golden zone at 181.5 to 2083 becomes the next destination. Full passage analysis consensus $3 to $5 by year end. And then there's road 2. The macro ceiling holds. Yields push through 4.623% towards 4.813%. DXY breaks $100.44 on a daily close. Bitcoin sub wave 5 continues towards $75,000 at XRP follows the broader market lower. The 4-hour retracement zone at 132.9 to 139.6 gets tested. If that zone fails on a daily close, the next floor is 127.7, the absolute line in the sand. The floor vote stalls on ethics language and the July 4th deadline gets missed, pushing the next window into late summer at best if in a no bill scenario. Analysts project XRP ranging between $1.50 and $2.50 for the rest of the year. The honest truth tonight, XRP has the best fundamentals and regulatory setup it has ever had. The macro is the ceiling. The legislation is the catalyst waiting to be triggered. Both things are true at the same time. The framework tells you when to move. Watch 144.3 on a closed 4-hour candle for the bull signal and watch 127.7 on the daily for the floor. Don't ride a bull at the top of the buck and don't chase a wild horse while it's still running. Let it come to you. The trade comes to the patient. And we're going to close it out with tonight's spiritual reading just like we do every single night. Tonight comes from Romans chapter 8, verse 28. And we know that all things work together for good to them that love God, to them who are called according to his purpose. Tonight we looked at regulatory battle that took 6 years to get to this moment. 6 years of lawsuits, uncertainty, and institutions sitting on the sidelines. And in 1 week, one committee vote, the road to statute just opened. It's not finished, it's open. JP Morgan and MasterCard are settling treasury transactions on the blockchain in under 5 seconds, while the price sits near an all-time low. The whale is on day 16 without missing once, and the bond market is telling you something the stock market hasn't figured out in years. All things work together doesn't mean all things working on your timeline. It means the pieces are all moving, even when you can't see the full picture. The patient hand that holds through the noise is the one that's there when the pieces land. God gets credit for this channel, and God gets credit for whatever comes next. Wrapping it up right here. Chris Hare, the world champion crypto cowboy. I really appreciate you watching. We'll see you down the road.